Good morning. This is Andy Tuttle with the Tuttle Group at Oak Mortgage, here again with your weekly market roundup. Hope you had a great weekend. So remember, I do this every week because I want you to be free. I want you to have peace of mind about home ownership, and that starts well before you ever buy your house. It starts with seeing your mortgage as the tool that it is that can help you create wealth. And that includes your loan and your lock strategy and timing this home purchase, or if you're looking to refinance your home refinance up with your plans for this home and your other financial goals. And I know if you're armed with timely market-based information, you can make some stronger, smarter, more confident decisions about those things. So let's dig into it. You know, last week, you probably heard it already everywhere, Janet Yellen made some waves at her first FOMC meeting, or Federal Open Market Committee meeting, and she got a little too specific on some things and had some weird statements that caused some confusion. Then on Friday, several other Fed presidents tried to kind of tame the waters, including Richard Fisher here in Dallas. And they tried to make the timeline for the tapering of the lessening of buying of mortgage bonds a little more ambiguous. And so they've done what they could to stabilize that, but all of that, along with some other economic activities and global activities with Russia and Crimea and all of those things, caused us to drop levels. Now let's go into the charts and talk about that, and then we'll talk about what's going to happen this week. So as you can see, the chart's a little bit of a roller coaster ride, and here's what happened last week. On March 19th, Wednesday, the day Janet Yellen spoke, we saw an 80 basis point drop in the market. Now remember, this is a price chart, so it's an inverse relationship. So we saw a 0.25% hike in interest rates on that day. So now we're in this range. We're starting to create a new range. A couple of things to note. This level here is the Fibonacci retracement level. It's just basically where they say markets correct to, about half where they peak. And so we're at that number, and we've held that support. This purple line is the 200-day moving average. So it's very important to note that this week we have some economic activities that can push us back above that line. If you started getting pre-approved up here, though, on March 3rd, just remember your rates are a quarter to maybe a half, depending on the product, higher than where you started. So just make sure that you've gone back, make sure that you still are comfortable with the payment on the home purchase you're trying to make sure you still are, can afford the price point of the home that you're trying to purchase. This week coming up is let's make sure I'm on the right, here we go, is the economic calendar. This week we've got a couple of big things. We have consumer, we've got the Case-Shiller report, the new home sales and consumer confidence on Tuesday, a lot of stuff, but also jobless claims and pending home sales Thursday, and then some more consumer sentiment and personal income on Friday. So we've got a packed report, and just need to know that this week is a good week to be watching it, and I'll let you know if we will break above that level, the 200-day moving average, and get into a new trading range. I'll keep you posted here. If you have questions, remember, you can always reach out to me at 469-319-0660. That number's in your post. If you want to find out more, you can call us there, of course, and you can also go to BeFree14.com. That's our new initiative. Hope you have a great week, and good luck out there, and happy hunting.